Welcome to the Maximize Your Medicare Weekly. In this edition, we've got the Bennis Act, a possible very positive change to help ease Medicare enrollment rules. We've got the devastating number of people who have lost their health insurance due to COVID-19. And I review whether or not you can believe all of the life insurance in a snap, the ads, the radio advertisements you see on TV, or that you hear on your radio and on your computer. Let's go.
Hey Jay, isn't that the same shirt you wore during your last video?
Maybe.
Shouldn't you change shirts?
No, I'm not going to change. We don't have time for that. Let's go. Hi, I'm J.O. I am the author of this book, Maximize Your Medicare. This is the Maximize Your Medicare Weekly. So what you see on your screen here is actually the email version of the weekly. You can subscribe to it at the bottom. There's a link down there. Some people want to have something in their inbox to read. I get it. Or on their computer. Some people don't have any interest in reading a thing. They want to digest stuff on video. I'm trying to lower the barriers here, okay, basically. Anyway, I'm going to go through the newsletter and the highlights of it for this week. We start off, before we get going, also know that there is a podcast, Maximize Your Medicare podcast. It's available everywhere. Spotify, Apple Podcasts, Stitcher, anywhere you listen to audio podcasts, you can find the Maximize Your Medicare podcast. This newest pod that just dropped today is a radio interview that I had this past weekend with a station in mid-Michigan. The host is his name is Art Lewis. He's been a radio host for 57 years. He's 77, still going strong. I owe him all sorts of debts of gratitude because he's been a supporter of my book since it first came out, right out of the gate. And he's stayed with, we have worked together twice, 3 times a year, every single year for the last 8. So big shout out to him. You can listen to that podcast. You'll be able to hear how well we get along. Something that's been going on for a long time. First up on current events, there's something called I always forget. I told you I awful that video. Right here in the front, something I've never mentioned here on the weekly, which is that, I've got a special offer for this book. Meaning that all you have to do, if you know somebody turning 65 for the remainder of this year, you can send me an email. You can send me your name, their name. When they contact me, I'll mail you a copy of the book. I'm going to pay for shipping. It couldn't be easier. The reality is I can't obligate your friend to do business with me. That is not allowed as a result of Medicare rules. Simply not allowed. So there's no obligation, literally no strings attached. I'll send you the book and I'll pay for postage. Okay, onward. This past week, this particular act has been progressing through the Congress slowly. It's taken 2 years. It's called the Bennis Act. There it is there on your screen. Right? It's been in the works since 2018. The point of it is to reduce confusion and errors when it comes to Part B enrollment. So you can remember the background here is that if you miss the window that you enroll in Medicare Part B, you've got to wait until a very specific time, which currently is January 1st through March 31st. And even then, you need to wait until July 1st until your Medicare Part B, the coverage date, actually is effective. So you can see what ends up happening. Somebody doesn't do the right thing. They come to me in April. They say, Jay, I need to sign up for Medicare Part B. I say, okay, we've got to wait until the next January 1st. And then until the next July 1st, it doesn't go into effect. During that whole time, the Part B late enrollment penalty window, the calculation continues to roll. It does. right? And that is 10% per each 12-month period. So you can hear it, that in addition to having to wait almost a year and a quarter in that particular case, a year and a quarter, you additionally have the late enrollment penalty. So this situation can occur, and this is this first point. What they're trying to do is move that from January 1st to March 31st, move it to the same as the annual election period, which runs from October 15th through December 7th. The second point here up on your screen. Let's see if you can, yep, you can see the second point here that I've just drawn a circle. It changes the delay in the Part B. So what happens is when you first turn 65, let's just say your birthday is April of a given year. Well, you've got the 3 months thereafter, which is May, June, July. See my sophisticated math, May, June, July. Let's say you wait until July 3rd to enroll in Medicare Part B. That's possible without late enrollment penalty. That is possible. However, there's still an additional 2-month delay until your effective date. So if you came and enrolled in Medicare Part B on July 3rd, it doesn't start on August 1st. You wait for 2 months after that. The Bennis Act, this proposed rule, would shut that down so that the person who enrolls on July 3rd, who procrastinated and waited until July 3rd, there can be real reasons for doing so. We won't get into that here. But in that instance, the effective date would become immediately August 1st. Pretty helpful stuff. Okay, let's continue on here. And on the actual newsletter is the link to the Medicare Part B Explained. I've released, there's thousands of videos about Medicare Part B, what it covers, et cetera, et cetera. And I look through them, and just full disclosure, I don't watch other people's videos. I'm supposed to. I heard all of that, and you click and look for YouTube advice on how to grow your channel, this, that, and the other, and you're supposed to this, that, and whatever. Anyway, I don't watch them. What I was struck, though, is the fact that I understand that, our society wants things, the fast answer. Give me the quick answer. Give me the fast answer. The issue is this can be complicated, and if you miss a nuance, you miss a single detail, the outcome can be hugely different. Huge. So I'm a little worried, candidly. I'm a little worried that what happens is people gloss over. They want to find the 3-minute video. They watch it in 3 minutes. They think they've got it. Yeah. Now you've missed something vital. Now what? The person who pays for that is you. Your recourse to the person who made the 3-minute video is not great. Good luck. It's just not going to be that great. So this video, unfortunately, and maybe it's overkill. And please tell me, you can leave your feedback, comments on videos. Please do that. I want you to do that. You could say that my videos are too long, but it's partly because I understand that these little details matter. And a single detail out of place can radically change either coverage or timing, misunderstanding of options. And then what ends up happening is people feel like I've given somebody the wrong impression, or they got the wrong impression from an agent or for commercials or advertisements. No, I don't presume that that's the starting point. However, can stuff get missed? Yeah. I have 200 pages of book over here telling you about details. And oh yeah, by the way, crazily enough, over 100 footnotes. What was I thinking? Nevertheless, it's that amount of detail required. Onwards. We keep going, and we see here that last week, if you go and watch the other video that reported, on the weekly last week, I talked about the huge number of people that would lose their health insurance coverage if you were unemployed due to COVID-19, due to pandemic. You became unemployed. and your spouse became unemployed and you were under your spouse's health insurance coverage, and that goes with children as well. We have a number, we have estimates, and literally the days after I released last week's video, we start seeing estimates. So this company or this think tank called Families First, I'll have links, and there's going to be a link there in the text below, right to the study. They estimated 5 million. 5 million. And if anything, that sounds low to me. I've seen other far higher estimates than that. So the issue here, again, just briefly, and you can please go watch the other video if you don't have the full flush of it. The problem here is that some of those persons, if the Affordable Care Act is repealed, and you've lost your health insurance due to unemployment, the issue is that the Affordable Care Act has the no pre-existing conditions clause, which means that you could have any type of illness and still must be accepted by health insurance carriers for ACA compliant policies. If you don't have an ACA, that protection is built into it. So if you strip down the entirety, you're going to be taking away the pre-existing conditions clause, meaning that the person who just got unemployed and the sick spouse who was under the employee's coverage not only lost their coverage, may not have been able to know the rules that they could have gotten other private health insurance, didn't qualify for Medicaid, and then can try to apply for health insurance. They could be subject to underwriting, in which case they be denied health insurance. During this incredible situation, we also have people who have had COVID-19. Thank goodness there was no such thing as COVID-19. COVID-19. Those persons, that could be also called a pre-existing condition. Now what? So my point here is that, this isn't getting that much press. I'm sure you know somebody who has this. They didn't know the exact rules. Let me just say, just before we get going here onto the rest, which is, if you have lost your job, you have protections today under the Affordable Care Act. There's COBRA, which can be too expensive, but you may have to stick with it if you don't qualify for Medicaid, if you don't qualify for APTC, which is the Advanced Premium Tax Credit, which is a subsidy for health insurance. Now, it's complicated. I'm not going to kid you. It's complicated. I've helped many persons in different parts of the country think through this, because there are tax implications here on whether you qualify. Even filling out healthcare.gov, it has to be done correctly. If you don't do it correctly, you could be accepting a subsidy and having to pay it back later. So it's full of ripple effects here that have to do with financial matters, right? There's no separating health insurance, Medicare versus taxes. Sorry, if you've tried to keep them separate, you could be missing something enormous. Let's go forward. So up on the YouTube channel, annuities. But today's real last thing about financial planning matters is, I saw this on Facebook, and you can see these on Facebook a lot. You can see them, you can hear on the radio, you can see them on TV. Life insurance in a snap, it's easy. Just call this 1-800 number. Life insurance in a snap for pennies a day, up to $500,000. We have a skeptical society. How's that for a tongue twister? Skeptical society. If I said that, I can't even say it once correctly, much less 5 times fast, right? If you think about it, the question is whether you can believe these ads. So you can see my response here. The answer is both yes and no. And you need to be careful, and you should not be surprised if you've made it to this point of the video. Yes and no, depends. You need to be careful. That's pretty much my answer to most things. The ads themselves are not going to be wrong. They're not, right? Pennies a day, $500,000 for X dollars a year or Y dollars a month. Those are going to be true. You'll see the small print on your screen on a TV commercial. What does it mean? Non-tobacco, X numbers of years, perfect height and weight, no pre-existing conditions. Okay. If all of those are true, then yes, what those advertisements saying is absolutely true. Here's your secret. It's also not a big secret. If you called me up directly, you send me an email, I can get you the same price. No particular carrier is going to have a different price than another one of these advertisements. How do I know this? I can find an exact tie down to the penny. You're a 35-year-old female in perfect height, perfect weight, no tobacco, no pre-existing condition. It's a tie to the penny. And we can find multiple carriers within $1 a month, literally. And I'm not exaggerating. So the idea that you're looking at one of these ads and it's like, ooh, they've got some secret that no one else had. That's not true. That would be like me going to 7-Eleven and saying, okay, my 7-Eleven has a different price on Wrigley Spearmint gum that no place could possibly have. And it only has, even though there's a Walmart and a Costco directly across the street. Not happening. To that degree, life insurance of the term policies that they're advertising on TV, it's that competitive. It's that competitive. So this is a problem with financial stuff. The financial advertising industry, if you will, the whole thing, the other types of financial advice you receive. And I'm sorry that this is the way it works. I'm sorry this is the way the world works, but I'm here to tell you this is the way. Which is, this is me, this is the industry and people trying to tell you it looks like it's a specialty, it's something rare and special that they and they alone have, when it's not. It just isn't. And I hope you kind of get that. You can watch my other videos. I'm never saying I'm the only guy who has this information. You won't catch me saying that because I don't believe it. Right? I'm not the only guy who could have figured this out. I'm not the only person who could have given you this message. I'm certainly not the only person who could have made this on a YouTube video. And as I told you, I got this face for radio. I got this Midwest tone. I can't even complete a sentence without mumbling or, I don't know, marbles flying out of my mouth. I got no talent for any of that. But what ends up happening is someone tries to market a skill or a product as if it's the greatest thing since sliced bread or some rare specific find. Guess what? The world is hyper competitive. Hyper competitive. I can't understate that to you. Because just like I can find another me somewhere, just like I could find another person, another seller of insurance, another seller of mutual funds, guess what? There's the equally smart, capable competitor who's selling an almost exact lookalike. Guess what? If they look and feel exactly the same and they behave exactly the same, guess what the price is? Exactly the same. Okay. So I've swerved. And this is what I don't like about these sites. They're trying to tell you this is some specialty thing that they and they alone have. Nope. Now, that's not necessarily negative, right? This happens in every business. This happens in every business. Oh, only these shoes can make you run faster, jump higher. Okay, right? Not that your DNA or, all the hard work you've put in has anything to do with it, but it's the shoes. Got to be the shoes. So this happens in every business. But here's the real catch to these advertisements about life insurance, term life insurance, which is that if you're not Miss Perfect, 35 years old, exact ideal height and weight, no pre-existing conditions, if you vary at all, number one, the price amongst this competitive market, it starts to widen from carrier to carrier. It's no longer a price tie that I just mentioned. It stops being a price tie. What's another one? If you get older, right? They're not telling you about a 55-year-old. They're not telling you about a 60-year-old looking for 20-year term, which is possible to locate. They're not advertising that. Why? Because it's not pennies a day. And it's not a tie. Now it starts to vary. So anytime that some moving part starts to move from their specific commercials, the price variance starts to increase. Very important. The real punchline is the following, which is that when you vary away from Miss Perfect 35-year-old, and don't get me wrong, it could be Mr. Perfect 35-year-old. This has nothing to do with your sex. But the point is that as soon as any variable moves, the issue is that if you get rejected for any reason, that the information is shared amongst all of the other sellers. So I couldn't buy Wrigley's gum from Walmart. Guess what? Costco knows. Sam's Club knows. Myers knows. Kroger's knows. And they all then have record that you tried to apply and were rejected. The problem with that is you can't erase that mark easily. You cannot. They're trying to prevent insurance fraud. There's a reason for having these rules. The issue with doing that, right, is that what ends up happening, you call 1-800, insurance for free.com or whatever the number is that you see on your screen. You call. You're not Mr. or Miss Perfect. You get rejected. That black mark stays with you. So this is why you need to be cautious, and this is why the point of this, the longest clip of today's video is this, because it's another example of the fact that a single detail is just off, just one. Then what can happen is it throws off the result and creates a ripple effect that you did not intend. And without, pointing fingers, you can know this at your auto insurance company. You can go to your big auto insurance company who just happens to say, we also sell life insurance policies. Well, here's your thing, is many times the auto insurance company for your case, let's say you want to buy $100,000 of term life insurance. The thing is frequently that company has the harder underwriting standard. And what that means is that, let's say you wanted to apply for term life insurance or any health insurance or, for example, universal life. What ends up happening is that the sellers can ask you different questions. They can make their own decisions. They're not all the same. And they're not going to tell you in advance. They're not going to tell you, oh, you get accepted easier at my company than the other company. And so now you've applied to a company that has a very difficult underwriting standard, and you had one detail off because of some event that happened 2 years ago. It not only puts a black mark next to your name at that carrier, but all the other carriers, including the easier graders, will also know. Last thing, which is that it's not well known, it's not frequently or commonly known that the lower price of term life insurance, yes, it's lower price. It's also this testing, this underwriting, it's harder under term than it is for whole life or universal life. Because there's a drop dead. There's a date. There's a specific date right under term insurance. And for those who do not know what term insurance is, let's just call the expiry date August 15th, 2030. So if you pass away on August 14th, 2030, your beneficiary gets the benefit. If you pass away on August 17th, nobody gets anything. In the same way, the insurance company, they're on the hook. They have to pay if you passed away on August 14th, 2030. They don't have to pay if you pass away on August 17th, 2030. So you can see there's this one day, and literally the outcome for not only you, but also for the payer, the insurance company, dramatically changes just off a single day. That's a far riskier situation for both you and for the carrier. So the carriers are asking the questions actually more carefully under term insurance. It's just another example. Please be careful when you're doing this. Now, full disclosure, do we traverse in this stuff? And the reality is the answer is yes. You're Miss Perfect, 35 years old. I'm going to tie. I'm not going to win. I'm going to just tie. Right? That's true. You're not paying me for that. What you're paying me for is to make sure we've not missed something else. That's the point. Because I'm also telling you that, look, my end product is no better than the other than 1-800-insurance.com or insuranceforfree.com. It's not going to be better. It's going to be a tie. But what I'm here to do is to prevent you from these other outcomes, which can be negative. That is where the value is. Okay, let's stop here. Be sure, please, subscribe to the channel if you've liked this video. Leave your comments, ask your questions. More than happy to answer. I'm Jay. This is the Maximize Your Medicare Weekly. Speak with you next week. Thanks for watching.